Hello, people. We got some good news and some not so great news. First, the good news. Banks are finally coming in and starting to buy these ETFs. Remember, I said right now, most of it so far has been retail. That's true because there's generally a 6-month waiting period between ETF approval and when big banks can actually buy ETFs. Now, this doesn't have much to do with SAB 121. That means they can't custody crypto for customers, but the ETF kind of gets around that actually because they can just buy ETFs and then have someone else, such as Coinbase, custody the ETFs. So large banks can indeed buy these ETFs for their customers because the ETFs are actually registered securities and there's no real legal we don't really know what this is with ETFs. ETFs are definitely securities, but the cryptos in behind them have some kind of questioning, at least according to the SEC. There's a lot of arguing back and forth about that, but the ETFs themselves, there's no arguing back and forth about that. They are securities. They do have, like ETFs have been around forever, so they do have a legal definition. So banks, institutions can actually buy ETFs. And this is I think the first filing where a big bank has acknowledged that they do indeed have ETFs in their balance sheet. This is Wells Fargo, and it's only $141,000. Now, that's a drop in the bucket for Wells Fargo. They own $1.7 trillion in assets. That's not to say they're actually worth $1.7 trillion. They basically just own $1.7 trillion on behalf of their customers, and ETFs are a small part of that now, the Bitcoin ETF. They have a lot of other ETFs. But I think this is just the first filing. They will buy a lot more. And Wells Fargo is not the only bank. All banks are competitive with each other, so if Wells Fargo is buying it, you can bet that other banks are buying it up as well. As soon as they get the paperwork through, it seems like Wells Fargo is just the first to get the paperwork through. So I think you're going to see a torrent of money coming into Bitcoin ETFs, which will affect Bitcoin price come June or July. I do think that's when the 6-month period is up, and that's when they'll actually come in, which is why I'm very, very bullish for the second half of the year, which is why you shouldn't actually wait until September to buy into Bitcoin, because when that money starts flowing in, I don't really think it's going to be stoppable. And even if you somehow get in before we get to $80,000, $100,000, you're still buying in 10, 15K higher than we are now. And you're going to lose out a lot of that ROI if you don't really start buying and loading at this point. I don't think we're dropping that much lower from this point. We could have a dip back into the high 50s, I suppose, but I don't think we're actually dipping that much right now. Speaking of which, we got to talk about why we're actually having this dip today. And it does have to do with the Fed. I think the Fed is basically just toying with us at this point. Every time they do something it's kind of dovish, a couple of days later, they do something kind of hawkish. Now, there are fears of stagflation because of the numbers, but the stock market hasn't responded, so the crypto market really shouldn't respond. I think it's just whales trying to play off basically the information, and it's much easier to manipulate crypto than to manipulate the stock market because the stock market is much, much bigger. Either ways, inflation went from 3.2 to 3.5, so people didn't like that. And the Fed is, I think, one of the Fed governors, not Jerome Powell, by the way, so he didn't actually say this, is saying that there's some fears of stagflation because consumer sentiment actually went down. It went down from 77 to about 67. The expected was 76. I'm not exactly sure how they measure consumer sentiment, but it's gone down. I mean, consumer demand really hasn't fallen, but I guess people expect tougher times in the future. Now, that can be reversed very easily within a month. And people still are just not buying any less stuff. They just expect to be buying less stuff in the future, which generally is not good for company profits. However, if that's true, that generally will bring inflation down. Now, I don't really think there's much to the whole stagflation thing. By the way, we're out on the deck. It's a 1,100 square foot deck, by the way. It's pretty big, but it's nice. I actually don't think that the consumer sentiment is really going to change consumer actions all that much. I think company profits are going to be fine for the rest of the year. And honestly, they need to chill out a little bit because prices do need to go down. And as long as people are buying stuff, prices aren't going down. And I think people are afraid of stagflation because what happened in the late 70s, early 80s, we were talking about double-digit inflation and essentially not a shrinking GDP at that point. With double-digit inflation, and basically like no rise in salaries. That's not what's actually happening right now. Like our inflation just went up from like 3.2 to 3.5. Salaries are still rising. And the unemployment, although it's like around 3.94 now, that's still pretty close to full unemployment. So I think the Fed is basically just stoking fears and trying to control prices so like inflation doesn't rise anymore. But inflation is largely controlled by energy prices. And I do think they're working towards and getting pretty close to a ceasefire in the Middle East, which will actually help release tensions, especially if the Houthis stop actually blocking the Red Sea area. And plus, if you actually look at Brent and oil, the global prices are not that high. Like right now, it's just companies price gouging at this point because according to those prices, like our gas in the United States should easily be below $3. But if with companies price gouging, and maybe some of our refining capabilities are sort of limited, but I still think it's mostly companies price gouging. There's really not much the administration or like anyone can do about that because obviously in the United States, you can't just tell companies to stop price gouging. I think they tried to pass a bill about that like 2 years ago and then it got blocked. So that is not going to happen. As long as they're price gouging and people are buying, they're going to keep price gouging. So that's kind of why I don't know if inflation's really going to go down. But if consumer demand goes down, if people stop flying so much, people stop driving so much, then they'll start to have to charge less for oil and gas. And especially if the Middle East tensions die down, the supply is going to increase. Our reserve has actually gone up a little bit lately, but prices for gas are still high because of the price gouging. I mean, if you look at the prices, they're still around $80 a barrel, which is up from like 65, but it's nowhere near like during right after COVID, where it was like over $100 a barrel, and gas is only slightly more expensive then. So it's kind of ridiculous. It is companies price gouging. There's not really that much we can actually do about it. But the supply is there. They're just kind of like gouging us on the price. But either way, I don't really think the fears of stagflation are really all that founded. I think it's the Fed really just trying to scare us to make sure inflation comes down. And I don't really like what they're doing, but they're probably going to keep doing it. But if the people like Wells Fargo actually start to come in and buy a lot of crypto, that's not going to be enough to keep the price down. So I think that's why we're dropping right now. But I do think we'll bounce back up within a couple of days, especially because the stock market isn't really reacting to what the Fed is saying. So that's the news for today. Let me know what you think, like and subscribe. Hit that bell notifications button. Thank you and have a nice day.